We welcome back to the show.
Steam's coming out of your ears.
John Carney, ace financial journalist, and if that weren't good enough, Taylor Riggs, co-host of the Big Money Show right here on Fabulous Fox Business. Thanks for the two of you. I appreciate it very much. John, start with you. First of all, some weirdness continued. Besides the fact that he's staying on, blah, 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 there were 3 dissents in this committee meeting. Not for easier money. Steve Myron wanted lower interest rates. But Hammack, Logan, and Kashkari, Reserve Bank presidents, they're dissenting because they objected to the Fed's easing bias, which I read the directive 3 or 4 times. I know you read it about 10 times. What are they talking about? What's going on here? This is very weird.
I couldn't find any easing bias at all. I don't think they could find an easing bias either. I think what they're trying to do is fire a warning shot at Kevin Warsh, saying we think that inflation is still too big of a problem. They really shouldn't have done this. This is not the way you welcome a new chairman in, by saying, you know, we object to this. I don't think I've ever seen 3 dissents, not to the actual decision on rates, but just to a language change that nobody else in the world can find in the statement. Maybe it was written in invisible ink and only a Fed president can read that.
Hold it up to the light. You know, this is a very weird meeting. I mean, first of all, he goes and he's not going to leave, so we have 2 CEOs. It's very ungentlemanly, Taylor Riggs. It's very ungentlemanly. I don't care what anybody said. It's very ungentlemanly. The only guy to do this in 113 years was Mariner Eccles, and he was actually asked to stay on as a board member by his pal Harry Truman. But in 113 years, no Fed chairman has stayed on beyond his term as Fed chairman. And if that weren't bad enough, so here, Beth Hammack, Neil Kashkari, Lori Logan, they support maintaining the target range, so there's nothing. But then they did not support inclusion of an easing bias in the statement. What are they talking about?
To what this guy said, they probably want to make sure that, in their opinion, they don't want the cut to be guaranteed. They want to make sure, and I think Jay Powell kind of hinted at this right now, no one is predicting a hike, but they're going to wait and see, and then we'll think about a cut later. The market for itself is not pricing in a cut at all for this year. I will say that Mr. Gunlock, Jeffrey Gunlock, the bond king, is saying that the probability of a hike he thinks is actually greater than the odds of a cut this year. Now, that's just the market and bond people speculating in there, but I imagine that those are people on the Federal Reserve who were saying, we just want to make sure that you know that inflation has to come down before we think about cutting, and that we are in this wait and see period. I think what was so interesting is he also got some questions about how's the transition. And he said, well, the last transition was easy because Janet Yellen passed the baton to Jay Powell. They sat next to each other for a couple years, and so it was very easy. He said this transition, he hopes that it'll be smooth, that this is indeed a new, I don't want to say a new guy because he's been in the Fed and he's served on the Fed, but someone coming in the building, and I think maybe Jay Powell is maybe defensive. I don't know.
I would say ungentlemanly. Ungentlemanly. No class. That's what I would say. By the way, John Carney, he had a lousy record. He had the highest inflation rate in 40 years, okay? Not just for a couple, I mean, his whole thing was the worst since the 80s. And actually, to give Volcker credit, Volcker was bringing that inflation rate down.
That's what I was going to say. You were being too kind to Powell. It's much worse than 40 years. Volcker came in and inflation was already high. Powell came in and inflation was very low. And he oversaw the inflation shoot through the roof.
This is by the by. Okay, so I think, go back, we had the great moderation. This is not a small point. From the late 80s, I'm going to say, through the 2000, I don't know how long, we had a 2% or less inflation rate for like 25 years, like several generations. Jay Powell broke that. basically. And he knocked it up to 3.5%. It was 2 or less. He took it to 3.5%, cumulative over 30%. I mean, that's a lousy track record. And on top of that, we didn't get growth, 2.4% growth. I mean, that's not the kind of, we should have 3.5%, 4% growth with all the tax cutting that went on. So, I mean, I don't understand. He hasn't a leg to stand on, and he's trying to be a martyr, big shot. I'm going to stay on until this thing's over. What? He's not the Inspector General has nothing to do with him as a board member. Is that, I mean, am I being unfair?
I don't think so. To his credit, what he did say is that he was concerned about this series of legal attacks on the Fed. He said not the verbal criticism. He thinks that the president and everyone always has a right to voice their opinion. But this was the legal attacks against him.
What I wish one of the journalists in that room had asked him is, who on the board does he think is too weak to fend off the legal attacks? Which Fed presidents does he think are too weak to fend off the presidents? Why does Jerome Powell have to stay on the board? I'll tell you why. Because his record is so bad, he wants to create the illusion that he was the great martyr for Fed independence. Because if you look at how the economy did, if you look at what happened to inflation, Jay Powell was a failed Fed chairman. He didn't have to be. When he got nominated, he was actually handed a dream job. All he had to do was support Donald Trump's economic policies. Instead, what he did was fight Donald Trump in the first term, become overly accommodative when Joe Biden flooded the entire economy with his American Rescue Plan, reckless spending, drove inflation through the roof. He had a dream position. He messed it up. He's trying to go out with, he's trying to create the illusion that he is a martyr for Fed independence.
I must say also, you know, the Jay Powell Fed was a very political Fed. And not just, I mean, sure, he slashed interest rates on the eve of the 24 election.
It's the DEI and the climate change.
That's right. Thank you.
And that's where people are like, and Kevin Warsh spoke about this at the Senate Banking Committee. That is way outside of our mandate.
Right.
Now, everyone was in 2020. It was cool to do DEI. It was cool to do climate change. But if you're thinking about a Federal Reserve that wants to maintain independence, you are not supposed to go along with the things that are cool in the moment and then aren't cool a couple years later. It is about the dual mandate of the Fed, and that is it. The fact that they were starting to look at climate change and DEI and the labor force was way outside their scope that Congress had given them.
Probably got them into trouble because they basically supported all the government spending. Once you sign on to that stuff, you're not going to voice any objections to the kind of government spending that was being passed by Congress to support that stuff.
I would like Warsh to do an audit of the papers being produced by the Fed economists. Because this is under the radar a little bit, but they are so woke. These papers are not the sort of papers that the Fed was producing for generations beforehand. The Fed economists redirected themselves to the political agenda of DEI and climate change. And that shapes the way the institution goes. And it shapes how the higher Fed officials, the ones we all know their names, are thinking about things. Warsh should do an audit. He should figure out why they've gone so far left in their economic papers and correct it. Boot the people out who won't correct course. Bring in new people who will do real economics at the Fed.
And don't give them a parking spot. Taylor, was there any particular market reaction today? I didn't see much.
Stocks were lower before the press conference and yields were higher before the press conference, and that's how they ended.
You know what? Bond yields are immune to martyrdom. They really are.
They are.
Martyrdom, you know what I mean? What, Saint government bond? I mean, I don't see it. We'll all go to church on Sunday.
My only worry is, you know, bond yields are near the highs of the year.
Yeah, well.
Just something I'm watching.
You've got, you know, at least a temporary energy problem. Everyone acknowledges that, including Kevin Warsh, who's not going to rush in and try to push down rates until the war is over. I mean, I think that's just common sense. Yeah. We don't need martyrdom and Jay Powell to do it. First time in 113 years. Not good. John Carney right here every week, not 113 years. And Taylor Riggs every day. Remember, to catch Taylor along with her co-host Brian Brenberg and Dagan and Jackie on the Big Money Show weekdays from 12 to 2 p.m. Eastern right here on Fabulous Fox Business. And they put me through my paces today. Thank you for helping us. John, great to see you again. All right, folks.